So do you also utilize covered calls on long shares? And I was going to ask you about your long term next. So let's go right into options with your long term strategy. Tell us about what you do there.
Yeah, so I do. I love covered calls also. I know, again, nothing that I'm mentioning is financial advice, by the way. I'm not licensed right now, and I don't want to be, and I don't want to be your financial advisor, whoever's listening. So this is not financial advice, but I look at covered calls. Like if you do them properly, they're win-win scenarios because if I get called away on something, let's say it's well, I got Tesla on a screen here. Let's say I own shares of Tesla and I bought them at 150, when it was crashing, and then I'd sell a covered call at 200 and I get called away. Um, I'm not losing, right? I bought lower, I sold higher. Like, yes, I'm capping my upside, but that's not a risk in my opinion. I know some people look at it that way. Or if the call expires worthless, then hey, I just made money and I can do it all over again. And that helps increase your returns. And this is one thing where when people say, like, oh, it's really hard to beat the market, I can say, I can give you one specific area it's actually super simple. All you have to do is own VOO, VOO, which is the Vanguard S&P 500 index, or SPY. I think it's like an extra $3 worth of management fee per 10K. And you sell one covered call over the course of a year that expires worthless, or you buy it back at 50% capture or what have you, which is not hard if you can do like a couple things with timing. But if you just do that once, you beat the market because you were in the market, which obviously a lot of people's benchmark is the S&P 500, and you got whatever call premium and you beat the market.
Yeah, I like that. Very nice. Yeah, because you get that premium on top of that SPY.